Hello friends, so this is the fourth video of the our series of economic PT365 discussion. Okay, so we are going to resume our discussion from where we have left. Okay, so in the last lectures, so we the first lecture we discuss about the banking and the monetary policy, where we discuss about the RBI and then self-regulatory organization for NBFCs, one state, one RRB, a small finance bank, SURFACE Act 2002. Then in the second lecture which we undertaken, we discuss about the finance and the taxation, where we discuss FRBM Act. Then we also understand the Indian tax structure, Income Tax Act 2025, then no, tax and GST reform, then other key terms we got to know. And in the last lecture, which was the third lecture of this series, we discuss about the financial market and the payment system, wherein we discuss Indian financial market. We understood the difference between the money market and the capital market. Then we understood about the SEBI, functions of the SEBI, then other key terms related to SEBI, then gift city and bond yield and digital payment. So here we this is the last topic that we discuss, that is the digital payments. Okay, now today what we are going to discuss, so today we will be covering the external sector, which is of around 4 pages. Okay, 4 to 5 pages, and then we will be moving to complete growth and development, which is chapter 5 for our discussion. Okay, so let us go on to discuss the external sector. So this is the external sector, which is chapter 4. So let us discuss. Okay, so yesterday we had a discussion. So you see all these highlighted PDF is there. So this is the external sector. Let us understand. So first of all, we need to understand FDI, which is foreign direct investment, and foreign portfolio investment, which is FPI, impact on Indian markets. Okay, now difference. So FDI means foreign direct investment. Okay, FPI means foreign portfolio investment. So FDI is basically strategic long-term investment. FPI is financial and short-term investment. Okay, this is a long-term commitment FDI, and FPI is short-term focus. Okay, primary market entry, real estate, setting up for business, buying large stake, uh, more than less than sorry more than 10%, build factories, create jobs, transfer technology. Okay, secondary market entry, second, stocks and bonds, buying a small stakes, less than 10% for profits, trade shares, bonds for price differences. Now, what is the impact of the FDI? So, capital market impact is stable foundation. Okay, provides long-term trust, ensure funds for 10-year growth, does not cause daily volatility. Now, money market impact on the money market. So, steady inflow, less impact on daily exchange rate, and RBI intervention rarely needed for FDI. Now let us understand the impact of the FPI, which is foreign portfolio investment, on the markets. Okay, so capital market, it has a high volatility, that is provides liquidity, money, hot money. Okay, drives bull bear runs, causes sharp corrections. Now impact on the money market and rupee impact. So rupee fluctuation, inflow rupee becomes stronger, outflow rupee crashes weaker. RBI often intervenes. Summary: market mover, liquidity and volatility. Okay, so we in a nutshell we got to understood that FDI is for a long term investment, whereas FPI is for a short term investment. Okay, FDI, with respect to FDI, you have less risk, but with regard to the FPI there is a high risk. Okay, so FDI is more than 10% investment, FPI is less than 10%. Okay, it is also FPI is in the secondary market entry. For example, stakes for less than buying stakes for less than 10% for profit, trade shares, bonds for price differences, whereas in the FDI you will find that they are traded in the primary market. Okay, so buying large stake, more than 10%, building factories, create jobs, transfer technology, etc. Okay, so that is the basic difference between FDI and FVI. Now let us move ahead to discuss another important discussion, which is again about the FDI. So this time we are going to discuss FDI in a great detail. FDI means foreign direct investment, and if you see the UPSC previous question, then you will find that this is one of the most important topic from your external sector part. Okay, so FDI, FVI has always been a important topic. So these are the evergreen topics. So let us understand. As per the RBI bulletin June 2025, India's net FDI inflows fell by 96% in financial year 25 in comparison to financial year 24, despite rise in its gross FDI inflows. Okay, so India's net FDI inflows fell by 96% in financial year 25 in comparison to financial year 24. Who is saying this? This is a report by the RBI, which is called RBI Bulletin. Okay, now let us understand the Foreign Direct Investment FDI. Okay, so governance and regulation. So FEMA Act 1999, Consolidated Foreign Direct Investment Policy 2020, Foreign Exchange Management Non-Debt Instruments Rules 2019, gross and net FDI. Gross, let us understand gross FDI. So what is gross FDI? So gross FDI is nothing but the total investment made by foreign entities directly into the productive assets of India. Okay, so gross FDI is the total investment which is made by foreign entities directly into the productive assets of India. So let us recall here only. Okay, so what is gross FDI? So please repeat with me that total investment made by foreign entities directly into the productive assets of India. Okay, so gross FDI, it is the total investment made by foreign entities directly into the productive assets of India. Now net FDI, so difference between inward FDI flows and outward in FDI flows, repatriation of by foreign firms plus outward FDI by Indian firms. Now let us understand the entry routes. So automatic route. So there is a automatic route. Prior approval of RBI or the central government is not required. Okay, so in the automatic route, prior approval of RBI or the central government is not required. Okay, now example of sector with the 100% FDI, 100% FDI through automatic route. These are agriculture and animal husbandry, coal and lignite, exploration of oil and natural gas, airports, greenfield and existing industrial parks, telecom services, trading, insurance, etc. Okay, approx 90% FDI in India is now under automatic route. Okay, so if you are having 90%, approximately 90%, which is near about 90% or more than 90% in FDI in any sector, then it is considered in the under automatic route. Okay, now what are the examples? So we have 100% FDI in or through automatic rule in sectors like agriculture and animal husbandry. Then we have coal and lignite, then exploration of oil and natural gas, airports, greenfield and existing industrial parks, telecom services, trading, insurance, etc. Okay, now let us see the government route. Okay, so government route, here we have, here there is a provision that prior government approval is required. Okay, and the foreign investment shall conform to the conditions stipulated by government in its approval. Okay, so if you want to if you want to done if you want to do FDI in India through government route, then you need to have prior approval of the government, and you have to also comply with the conditions imposed by the government. Okay, now examples of FDI prohibited sectors in India. So there are certain sectors which have been prohibited, means you cannot enter, you cannot invest, you cannot have foreign investment into those sectors. Okay, so these are the prohibited sectors in India. Let us see. So you have lottery business, including government, private lottery. Now online lotteries are also there. Now gambling and betting, including casinos, etc. Chit funds. Okay, nidhi company activities or sectors do not open to private sector. Okay, for example atomic energy, railway operations, etc. Okay, now please remember that atomic sector has been open now. Okay, not atomic sector. Yes, nuclear sector. Yes, nuclear sector, not in atomic sector. Rather, nuclear sector has been open now in India. Okay, into the foreign FDI. Okay, so I guess atomic sector means this is an umbrella term, and nuclear energy is also part of atomic sector. I think now you please remember atomic sector. Okay, you can just search that whether it is a part of FDI or not. Okay, so for your convenience, let me bring the Google. Just a second. So here you can see this is Times of India, which is saying that that up to 49% foreign direct investment could be allowed in India in the Indian nuclear energy landscape. Okay, so they are just projecting. Let me bring any substantial evidence. Okay, so I don't know that. So they are just saying that they are considering. Okay, Santi will. I think Santi will is allowing the investment for the. Just a second, Santi will. So here is the Santi will. Okay, so you see the sustainable harnessing and advancement of nuclear energy for transforming India, which is Santi will. Okay, the bill consolidates and modernizes India's nuclear legal framework. It enables limited private participation in the nuclear sector under regulatory oversight. Okay, so limited private participation, which of course means that foreign direct investment is being allowed now. Okay, it strengthens a statutory regulation by granting a statutory recognition to the Atomic Energy Regulation Board. It supports India's clean energy transition and the long-term objective of achieving 100 gigawatt of nuclear energy capacity by 2047. So these all things are there, and now these are the 24 reactors currently across 7 locations. Okay, so this is so by now the atomic energy FDI is allowed in the atomic energy sector. Okay, so here we are back. So atomic energy now it is open for FDI. Okay. Now case stats related to FDI inflows in India. So you can just see the graph. Okay. Now foreign portfolio investments. Okay, investors. Sorry, foreign portfolio investor. Why this is in news? Because as per the National Security Depository Limited, foreign portfolio investor FPIs have sold cash shares worth 2.02 trillion dollar in the calendar year through October 01. Okay, now what is foreign portfolio investors (FPIs)? So let us understand. So foreign portfolio investors can hold a maximum of 10% of any Indian company's total paid equity capital. Okay, amount of money that a company receives from shareholders in exchange for shares. Okay, so what is portfolio investors? So FPI can hold a maximum of so they can hold a maximum of 10% of any of an Indian company's total paid equity capital. So equity capital Indian company appear to those person or the entities who can hold a maximum of 10% of an Indian company's total paid up to entity equity capital. Okay, amount of money that a company receives from shareholder in exchange for shares. Now exceeding this 10% cap, FPI can divest, selling of the surplus shares or reclassify themselves as a foreign direct investment (FDI). RBI and SEBI framework on reclassification of FPI to FDI issued in 2024 made following provision. Reclassification shall not be permitted in sectors prohibited for FDI, for example, cheat funds, gambling, etc. FPI investment requires government approvals are required, especially from land bordering countries, and need Indian invitee companies concurrences. Now, internationalization of rupee. Why in news? The RBI removes prior approval requirements for banks to open a special rupee Vostro accounts, speeding up rupee-based trade settlements and supporting the internationalization of Indian rupee. More on news. So, a special rupee Vostro accounts (SRBA) mechanism was introduced in July 2022 to enable exporters and importers to voice and settle trade in Indian rupees. That is the internationalization of Indian rupee. Now, what is Vostro account? So, refers to a foreign bank's account held in a domestic bank in the local currency. Vostro account means it refers to a foreign bank's account held in a domestic bank in the local currency. So it is Vostro account refers to a foreign bank's account held in domestic bank in local currency. Okay, for example, let us see consider that the Bank of New York, which is the foreign bank for us in India. Okay, now what is happening that SBI is holding a bank account of the foreign bank, which is a New York bank in the local currency. That is what is called Postro account. Okay. For example, if a US bank holds an account in Indian bank in rupees, it is Savings Postro account. For example, if a US bank holds an account in an Indian bank in rupees, it is Savings Vostro account. How it works for importers: when an Indian importer pays a foreign trader in rupees, the amount is credited to the Vostro account. For example, when an Indian exporter receives payment, money is deducted from the Vostro accounts and credited to exporter's regular account. Now, Nostro account, it refers to a domestic bank's account held in foreign bank in the currency of the overseas currency. For example, an Indian bank SBI holds an account in a US bank, Citibank in US dollar. It's SBI's Nostro account. Nostro account simplify the process of exchanging and trading in foreign currencies, for example, US dollar. Now, what is an international currency? An international currency is a currency like the US dollar or the euro used for transaction between countries and beyond the borders of issuing nation. Just like domestic currency, it performs the three functions of money as medium of exchange, a unit of account, and a store of value. Currency convertibility. So, if you see the previous question, I think 2022, then UPSC has asked this question that what is currency accountability. Okay, so it means that country's currency can be freely exchanged for foreign currency at exchange rate determined by market forces. Okay, determined by market forces. It has two components: current account convertibility and capital account convertibility. Now, current account convertibility, freedom to convert rupees to other currencies for payments without restriction. It is fully convertible in India. Capital account convertibility, freedom to conduct investment transactions without constraints. It is partially convertible in India. Now, steps taken for internationalization of rupee. RBI has a strategic action plan for 2024-25 permitting INR account outside India. Okay, a Spectra project software platform for external commercial borrowings and trade credits reporting Indian payment infrastructure. Okay, India linked UPI with various countries. Asian Clearing Union RBI proposed including INR as settlement currency under ACU. Liberalized FEMA regulation 1999 by RBI. Now, uh, related news. Now, what is REIT, which means real effective exchange rate? So this has also been asked by UPSC in 2023. So rupee weakens to a record low with the real effective exchange rate indicating continued undervaluation. About REIT definition. So real effective exchange rate. So REIT measures a country's currency value against a basket of major trading partners currencies adjusted for relative inflation. So REIT measures a country's currency value against a basket of major trading partners currencies adjusted for relative inflation. Okay, it is derived by adjusting the nominal effective exchange rate here for relative consumer prices. Okay, trade competitiveness. A higher rate makes exporter more expensive and imports cheaper, reducing trade competitiveness. A lower rate indicates the currency is undervalued, potentially boosting exports.